Based on the historical data and forecast, Bitcoin has shown considerable volatility. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential price breakouts. The recent price action shows a downtrend from 95,500 to 88500, with the forecast predicting a slight rebound. Considering these factors, I recommend a strategy focusing on short-term momentum and utilizing support and resistance levels. We will implement a combined RSI and Bollinger Band strategy with a focus on the 88,000 to 89,000 range. The entry price for a long position will be $88,200, coinciding with a bounce off the lower Bollinger Band and a potential oversold RSI reading. The stop loss will be set at $87,800, just below the recent low and the bottom Bollinger Band, to limit potential losses. The initial target price will be $88,800, aligning with the upper Bollinger Band and a minor resistance level. If the price reaches $88,800, we will move the stop loss to the entry price of $88,200, securing profits and allowing for further upside potential. A secondary target price of $89,200 will be considered if the initial target is reached, based on the resistance level. This strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Ethereum has shown significant volatility, with a recent downtrend followed by a slight recovery. The support price remains consistently at $2,810, while the resistance is at $3,310. The RSI has fluctuated considerably, dipping into oversold territory, below 20, and approaching overbought levels, above 80. Considering this, I recommend a combined strategy utilizing RSI and Bollinger Bands. First, when the RSI falls below 20, enter a long position at $2,810, setting a stop loss at $2,770 to protect against further downside. Aim for a target price of $3,310, capitalizing on a potential rebound. Next, when the price touches the bottom of the Bollinger Bands, enter a long position at $2,770, setting a stop loss at $2,700. The forecast suggests a stable price around $2,960 to $3,000, indicating a potential for a short-term upward movement. Target price should be set at $2,980. Combining these two strategies, we can achieve high returns by taking advantage of both oversold conditions and potential breakouts from the Bollinger Bands. This combined strategy offers a balanced approach to manage risk and maximize potential gains in the volatile Ethereum market. Based on the historical data and forecast, BNB shows a slight upward trend, but with considerable volatility. The RSI fluctuating between 39.7 and 66.0 indicates periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently touched the lower band, suggesting a potential bounce. Considering these factors, I propose a long position strategy focusing on short-term gains. Entry price will be $891, coinciding with the forecast price on January 29, 2026. A stop loss will be placed at $887, just below the recent support level and the bottom of the Bollinger Bands, to limit potential losses. The target price is set at $901, aligning with the forecast price for February 4, 2026 and providing a reasonable profit margin. To enhance the strategy, I will incorporate an RSI-based filter. If the RSI rises above 60 during the trade, consider taking partial profits at $896 and adjusting the stop loss to break even. Conversely, if the RSI falls below 40, exit the trade immediately. This adaptive approach allows us to capitalize on short-term momentum while mitigating downside risk. The combination of forecast data, support and resistance levels, and RSI signals creates a robust and potentially high-return investment strategy for BNB. Based on the historical data and forecast, XRP exhibits a slightly downward trend, fluctuating within a range between $1.84 and $2.06. The RSI indicates periods of oversold conditions, below 40, and overbought conditions, above 60, suggesting potential entry points. The Bollinger Bands show that the price is currently near the lower band, indicating a possible short-term bounce. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. The initial strategy will be to buy XRP at $1.87, placing a stop loss at $1.84 to limit potential losses. The target price will be $1.92, aiming to capitalize on a potential bounce from the lower Bollinger Band and the support level. To refine the portfolio, I propose a second strategy focusing on the forecast data. The forecast predicts a price around $1.9 for the next week. Therefore, I suggest a second buy position at $1.89, with a stop loss at $1.87 and a target price of $1.92. This strategy aims to profit from the predicted stability and potential slight upward movement. Combining these two strategies, the overall portfolio will be diversified, mitigating risk while aiming for high returns. The combined strategy offers a balance between capitalizing on historical trends and anticipating future movements. Based on the historical data and forecast, Solana demonstrates a downtrend, with prices consistently below the Bollinger Band center and approaching the support level of $118. The RSI consistently below 50 confirms this bearish momentum. I recommend a short position strategy. Specifically, enter a short position at $124. Set a stop-loss order at $126 to protect against a potential reversal. A reasonable target price for this trade is $118, aligning with the established support level. This strategy leverages the downtrend and aims to capitalize on further price declines. To refine the strategy, I suggest incorporating the RSI indicator. If the RSI reaches an oversold level below 20, consider closing the short position and securing profits. Conversely, if the RSI rises above 80, it signals a potential trend reversal, and a partial or full exit from the position might be warranted. Given the forecast for the next week, the price is expected to hover around $124 initially, then gradually decline to $122. This supports the short position and reinforces the target price of $118. The combined strategy provides a balanced approach, combining trend following with momentum indicators for enhanced risk management and profit optimization. Based on the historical data and forecast, TRON demonstrates a slightly downward trend with periods of consolidation. The RSI fluctuates between 45 and 72, indicating both oversold and overbought conditions. Considering the support price of $0.294 and the forecast prices hovering around $0.297 to $0.3, a conservative strategy focusing on short-term gains is advisable. I recommend a buying opportunity when the RSI dips below 30, setting an entry price at $0.297 plus 0.01 is equal to $0.298. A stop loss should be placed just below the support level at $0.294 plus 0.005 is equal to $0.2995 to protect against a potential downward breakout. The initial target price should be set at the nearest resistance level of $0.298 plus 0.01 is equal to $0.299, aiming for a quick profit. To further refine the strategy, we can incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, reinforcing the buy signal. The center band acts as a dynamic support level. If the price reaches the upper band, it indicates an overbought condition, prompting a potential sell signal. Given the forecast, I suggest a second buy opportunity if the price falls to $0.296 plus 0.01 is equal to $0.297, with a stop loss at $0.294 plus 0.005 is equal to $0.2995 and a target price of $0.297 plus 0.01 is equal to $0.298. This combined RSI and Bollinger Bands approach offers a balanced risk-reward profile, capitalizing on short-term price fluctuations while mitigating potential losses. Based on the historical data and forecast, Dogecoin demonstrates a downtrend with periods of consolidation. The RSI consistently fluctuates around the 40 mark, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been contracting, suggesting decreasing volatility. The support price remains stable at $0.122, while the resistance is at $0.137. Considering the forecast, the price is expected to hover around $0.124, which aligns with the current support level. Therefore, I recommend a cautious contrarian strategy. My strategy involves a long position when the RSI dips below 35, indicating an oversold condition. Entry price should be 0.116, with a stop-loss set just below the support level at 0.114. The initial target price is 0.124, aligning with the forecast and the recent resistance. If the price reaches 0.124 and the RSI approaches 60, consider moving the stop-loss to break even and setting a secondary target price at 0.137, the resistance level. This strategy capitalizes on potential short-term bounces while mitigating risk with a tight stop-loss. Based on the historical data and forecast, Cardano has shown a downtrend with recent price fluctuations. The support price is consistently at $0.339, and the resistance is at $0.423. The RSI is mostly below 50, indicating a bearish momentum, with dips into oversold territory. The Bollinger Bands are narrowing, suggesting potential volatility. Considering this, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position when the RSI reaches an oversold level of 20, anticipating a rebound. The entry price will be $0.355, with a stop-loss placed just below the support level at $0.339. The initial target price will be the center of the Bollinger Bands, around $0.387. To maximize potential returns, we'll implement a trailing stop-loss strategy. Once the price reaches $0.387, we'll move the stop-loss to break even, protecting our initial investment. If the price continues to rise towards the resistance level of $0.423, we'll move the stop-loss to $0.41, aiming for a final target price of $0.423. However, if the price fails to reach $0.387 and shows signs of further decline, we'll exit the position at the initial stop-loss of $0.339, minimizing potential losses. This strategy combines RSI-based entry with Bollinger Band guidance and a trailing stop-loss to adapt to changing market conditions, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a fluctuating trend with support at $571 and resistance at $600. The RSI indicator fluctuates between 40 and 51, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI crosses 45, anticipating a move towards the resistance level. Specifically, we will enter a long position at $586 plus $, placing a stop-loss order at $571 plus $, to protect against a potential downside reversal. Our target price will be $596 plus $, aiming to capitalize on the anticipated move towards the resistance level. This strategy combines RSI signals, Bollinger Bands, and support/resistance levels for a balanced approach. The potential return is substantial, while the risk is managed through a well-defined stop-loss order. This strategy is expected to yield high returns with moderate risk. Based on the historical data and forecast, Wrapped Beacon ETH has shown considerable volatility with a recent downtrend. The RSI has dipped below 40, indicating oversold conditions, particularly on January 27 and 28, reaching 32.7 and 38.0 respectively. Considering the forecast for the next week, the price is expected to hover around $3,230 to $3,260. We will implement a combined strategy leveraging RSI and Bollinger Bands. The primary strategy will be a long position when the RSI is oversold, below 20, and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $3,230, with a stop-loss placed just below the support level at $3,050. The initial target price will be set at $3,260, aligning with the forecast and a minor upward correction. To enhance returns and manage risk, we will incorporate a secondary strategy based on Bollinger Bands. If the price bounces off the lower band and shows signs of upward momentum, we will adjust the target price to the mid-band level, approximately $3,370. Conversely, if the price fails to sustain above the lower band and approaches the stop loss, we will exit the position to minimize losses. This combined RSI and Bollinger Band strategy aims to capitalize on short-term price fluctuations while mitigating downside risk through strategic stop-loss placement and dynamic target adjustments. The portfolio will prioritize the long position strategy with a 70% allocation and the Bollinger Band's adjustment strategy with a 30% allocation. Based on the historical data and forecast, Algorand has been fluctuating within a defined range, bouncing between a support price of $0.115 and a resistance price of $0.128. The RSI indicates that the asset is currently not significantly overbought or oversold, hovering around the mid-40s to low 50s range. The Bollinger Bands show that the price has been testing the lower band recently, suggesting a potential for a short-term bounce. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $0.124, anticipating a rebound from the recent lower Bollinger Band touch. To mitigate risk, we will set a stop loss at $0.115, right at the established support level. Our target price will be $0.128, aligning with the resistance level. To further refine the strategy, we'll incorporate RSI signals. If the RSI drops below 20, oversold, it would signal a stronger buying opportunity, potentially lowering the entry price. Conversely, if the RSI reaches 80, overbought, it would suggest taking profits or tightening the stop loss. Given the forecast anticipates a gradual increase, with prices ranging from $0.122 to $0.127 over the next week, the $0.128 target seems achievable. This combined approach, leveraging Bollinger Bands for entry and RSI for confirmation and risk management, offers a balanced strategy aiming for high returns while managing potential downside risk. The portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, PYTH network shows a downtrend followed by a slight recovery. The support price of $0.0616 has consistently held, while the resistance at $0.0709 remains elusive. The RSI fluctuates around the midpoint, recently showing signs of recovery, but still below 50, indicating a potential weakening of the downtrend. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I recommend a cautious long position strategy. The entry price should be $0.0601, coinciding with the first day of the forecast period and a relatively low price point. The stop loss should be set slightly below the support level at $0.059 to protect against a potential breakdown. The initial target price is $0.0637, aligning with the forecast high and a reasonable profit margin. If the price reaches $0.0637, consider moving the stop loss to the entry price $0.0601 to secure profits and potentially ride further upward momentum. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, DoubleZero shows a fluctuating trend with periods of consolidation and minor upward movements. The RSI values mostly hover between 45 and 63, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. The forecast for the next week indicates a downward trend, with prices potentially reaching $0.117. Given this, I recommend a short-term contrarian strategy. We will initiate a short position at $0.124, anticipating a slight pullback based on the forecast. The stop loss will be set at $0.127 to protect against unexpected upward movements, and the target price will be $0.118, aligning with the forecast low. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 40, signaling an oversold condition, we will immediately close the short position and consider a long position at $0.118 with a stop loss at $0.117 and a target price of $0.125. Conversely, if the RSI rises above 70, indicating an overbought condition, we will maintain the short position and adjust the target price to $0.117. This adaptive approach, combining forecast analysis with RSI signals, aims to maximize returns while managing risk effectively. This portfolio is efficient because it considers both the forecast data and the RSI to create a position. Based on the historical data and forecast, Jupiter shows a downtrend followed by a slight recovery. The RSI consistently fluctuates around the middle level, indicating indecision in the market. The Bollinger Bands have been widening, suggesting increasing volatility. Considering these factors, I recommend a moderately bullish strategy focusing on short-term price movements. We will implement a strategy based on the RSI and Bollinger Bands. The entry price will be $0.204 when the price touches the lower Bollinger Band and the RSI is below 40. The stop-loss price will be $0.199, just below the support level of $0.203. The target price will be $0.217, aligning with the forecast price and the upper Bollinger Band. To refine the strategy, we'll incorporate a dynamic stop-loss. Initially, the stop-loss is set at $0.199. If the price rises to $0.211, we will move the stop-loss to $0.205 to secure profits. If the price continues to rise to $0.217, we will move the stop-loss to $0.21. This approach aims to maximize potential gains while minimizing risks. The overall portfolio will allocate 60% to this strategy, 30% to a conservative strategy focusing on the support and resistance levels, and 10% to a high-risk strategy targeting the upper Bollinger Band. This diversified approach balances potential returns with risk mitigation. Based on the historical data and forecast, Sun token shows a downtrend, with the forecast prices consistently decreasing from $0.0185 to $0.0158. The RSI values have been fluctuating, but recently dipped below 30, indicating an oversold condition. The Bollinger Bands are narrowing, suggesting decreasing volatility. Given this scenario, a contrarian strategy focusing on short-term rebounds is advisable. We will implement a combined strategy using RSI and Bollinger Bands, with a slight consideration for support and resistance levels. The primary strategy will be to enter long positions when the RSI falls below 20 and the price touches the lower Bollinger Band. Specifically, enter long at $0.0158, with a stop-loss at $0.0155. The initial target price will be the center of the Bollinger Bands, $0.0186, aiming for a quick profit. If the price continues to rise and breaks above the upper Bollinger Band at $0.0214, we will adjust the target price to $0.02. However, given the overall downtrend and the support level at $0.0175, we will maintain a conservative approach, exiting the position if the price reaches $0.0175. This blended approach balances the potential for short-term gains with risk mitigation in a declining market. Based on the historical data and forecast, Render exhibits a downtrend with considerable volatility. The price has tested the support level of $1.86 multiple times, and the RSI consistently dips below 50, indicating bearish momentum. The forecast for the next week projects further declines, with prices hovering around $1.93 to $1.99. Considering the RSI readings and Bollinger Bands, I recommend a short selling strategy. We will enter a short position when the price touches the support level of $1.86. The stop loss will be set at $1.95, just above the recent high and the upper Bollinger Band. The initial target price is $1.80, aiming to capture a significant portion of the potential downward movement. To refine this strategy, we will incorporate a dynamic adjustment based on the Bollinger Bands. If the price approaches the lower band of $1.72, we will adjust the target price to $1.70 to secure profits. Conversely, if the RSI rises above 50 and the price approaches the middle Bollinger Band of $1.93, we will close the position to mitigate potential losses. This combined approach leverages both RSI and Bollinger Bands to maximize returns while effectively managing risk. The portfolio will be 60% short selling strategy, 30% RSI strategy, and 10% Bollinger Band strategy. Based on the historical data and forecast, SKY shows a slight upward trend. The RSI consistently hovers around 50 to 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. The forecast for the next week predicts prices around $0.0665 to $0.067, approaching the resistance level of $0.0708. Given these observations, I propose a moderately bullish strategy focusing on short-term gains. My recommended strategy involves a long position with an entry price of $0.0658. The stop loss should be set just below the lower Bollinger Band at $0.0555 to protect against unexpected downturns. The initial target price is the resistance level of $0.0708, aiming for a significant profit. If the price reaches this target, consider moving the stop loss to the entry price of $0.0658 to secure profits and potentially ride further upward momentum. This strategy combines trend following with volatility protection, balancing risk and reward for optimal returns. Based on the historical data and forecast, PAX Gold demonstrates a strong uptrend. The RSI consistently remains above 70, indicating overbought conditions, but the price continues to climb, suggesting strong bullish momentum. The Bollinger Bands have been widening, confirming this trend and providing support and resistance levels. The forecast data projects further increases, with prices reaching $6,040. Therefore, I recommend a long position strategy. Entry price will be $5,390, with a stop loss placed at $5,250 to protect against a potential pullback. The initial target price is $5,780, aligning with the forecast for February 1, 2026. To optimize returns, I suggest a tiered approach. After reaching the initial target of $5,780, consider moving the stop loss to break even to secure profits and allow for further upside. The next target price is $5,900, followed by a final target of $6,040, coinciding with the end of the forecast period. This strategy leverages the confirmed uptrend, utilizes RSI and Bollinger Bands for confirmation, and incorporates risk management through strategic stop-loss placement, aiming for substantial gains while mitigating potential losses. Based on the historical data and forecast, just shows a fluctuating trend with periods of consolidation and upward movement. The support price consistently remains at $0.0417, while the resistance fluctuates but generally hovers around $0.0469. The RSI indicates periods of oversold and overbought conditions, with recent values trending towards the middle range. The Bollinger Bands suggest that the price is currently near the upper band, indicating a potential for a pullback. Considering these factors, I recommend a portfolio combining a long position strategy during oversold conditions and a short position strategy when overbought. Specifically, I suggest entering a long position when the RSI falls below 20, with an entry price of $0.0379. Set a stop loss at $0.0375 to limit potential losses. The target price for this long position should be $0.0438, based on the forecast data and the resistance level. Conversely, if the RSI exceeds 80, enter a short position with an entry price of $0.0471. Place a stop loss at $0.0475 and target a price of $0.0431, aligning with the forecast and support levels. This combined strategy aims to capitalize on both upward and downward price movements, maximizing potential returns while managing risk. Based on the historical data and forecast, Worldcoin shows a fluctuating trend with recent upward momentum. The RSI has moved from oversold levels, below 20, to nearing overbought, above 80, suggesting increasing buying pressure. The Bollinger Bands have been widening, indicating increased volatility and potential for price movement. The forecast predicts a continued upward trend, with prices potentially reaching $0.545. Considering these factors, I recommend a long position strategy. The entry price will be $0.497, coinciding with the first day of the forecast period and a relatively low price point. A stop loss will be placed at $0.46, slightly below the lower Bollinger Band to account for potential dips. The initial target price will be $0.545, aligning with the forecast high for the week. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. If the RSI reaches 80, consider taking partial profits and adjusting the stop loss to protect gains. If the price touches the upper Bollinger Band, it signals a potential overbought condition, prompting a review of the position. If the RSI drops below 20, it signals an oversold condition, indicating a potential buying opportunity. The core strategy remains a long position with an entry at $0.497, a stop loss at $0.46, and an initial target price of $0.545. This approach combines trend analysis, momentum indicators, and volatility bands to maximize potential returns while managing risk effectively.